Hello, Paul, Gerrard from Price Accounting Services, back with one of our video topics for this thread that deals with rental property income issues, tax deductions, etc. And today we're going to talk about this concept called scrapping. It's something that you won't necessarily hear a lot about. I just want to explain some of the key rules and when it applies and what it is, because scrapping is actually nothing fancy. It's another word for a form of depreciation deduction. And it starts with this. First of all, you must have a quantity surveyor report for the property which is proposed to be demolished and then rebuilt and then re-tenanted. So it's really important that you've got that continuity of income producing purpose, okay? Without it, scrapping may not apply. And I'll use a client example where the client purchased an old property and the intention was to rent it out for a few years, let it develop some council DA plans, and then on this particular lot of land there were going to be a duplex built, 2 dwellings, I think it was, villa. And then following the construction, both were to be rented out, and there's no intended sale of any of the property. And the taxpayer was doing this on 2 neighbouring blocks, so 4 properties being built on 2 lots. And so we had extensive discussion with the client, and we determined that yes, he had a quantity surveyor report for each property, and that the value of the 2 properties was in the order of $70,000. And so at the date in which, I think it was April, he was terminating the tenancies, and then the property was going to proceed to be demolished, and it would take around 9 months. So in April, we claimed an effective life deduction, i.e. a scrapping deduction. In other words, we claimed the residual value that was available on the depreciation schedule, and the taxpayer confirmed with us that there was no scrap being sold, because if there was, let's say the air conditioner was to be recycled and sold on Gumtree and you get $1,000 for it, you would need to make an adjustment to the scrapping deduction to reduce it by the value of the sale of the recycled material or the assets or whatever it might be. So the taxpayer is then able to claim the deduction. Then on the completion of the new project, new quantity surveyor reports and commence deductions once again. So that's how scrapping works. So really key issues surround planning, making sure you've got a quantity surveyor report, and definitely getting tax advice, because it'd be very dangerous to claim such large deductions without that information and advice. So look forward to your inquiry if you're a client. Speak to us on Property Chat, give us a call, and watch our other videos in this playlist. And until then,